Alright, welcome back. I'm going to do a basic series on swing trading, simple swing trading. We're going to take much of what we've learned and turn it into swing trading. This is mostly what I do. There's many ways to trade, many ways to swing trade, but I'm going to frame it in some particular ways here. And as always, the goal is going to be simple. We want to be able to listen. We just want to be able to visually see simple on a chart. We know how to frame swings now. We have a swing, just swing. All we're trying to do is capture the swing, and we're going to be in this series, we're going to be looking for a 3-to-1 risk reward ratio. You don't need to have a huge win rate for this. And so in a swing, we've studied the various components, but just remember, keep it simple. We're just trying to find a way to capture a swing for 3-to-1 risk reward. We're not trying to capture huge long-term trends, although you can if you want. Just a swing. This is what median lines do. They show you when a swing cycle completes. And my trading plan has always been, buy higher lows and sell lower highs. I'm okay with taking a swing, getting 3-to-1, getting out, looking for another swing. But let's learn the basics of this. We've learned so far how to map swings, and we've learned the components. I just put some reminders here. So a swing is going to go through a process. And we've spent a lot of time learning about that process. We're going to be putting it all together. So it's going to have an impulse leg, it's going to have a pivot component, it's going to have a reaction leg, going to have another pivot component, and then another impulse leg. What I've done here, this is a wash and rinse, the pivot component. I just took it apart. That is this part here. So if you take what I have so far, you can see how we can design a very simple, basic way to trade. We're going to wait for the market to be up in a nice impulse. We're going to wait for it to pull back deep enough to give us a 3-to-1, and then we're going to use this pivot components as a way to enter the trade when price does a change in behavior. So let's write down what we got so far. Number one, impulse, right? The impulse is very important. It's showing which way they want to go. It's showing their intent. Number two, reaction deep enough to offer a 3-to-1 trade. Number three, we're going to be doing a right side of the pivot entry, right? Left side, right side. We're going to let the market give us a change in behavior. So number three, CIB, change in behavior, and we can say that another way. That the buyers swap the sellers. So you saw in the previous blogs I talked about the swap. I've talked about washes. So price is going to impulse. It's going to have enough room, so we need to study these. It's going to have enough room to go up, showing it's got some juice. It's going to pull back, and in this pullback it's going to show us some sellers in a fashion over here, and then it's going to zoom those sellers, and from there we'll talk about different entry techniques. Alright, so let's take this apart. I'm going to keep making it simple, and over the series we'll look at it in a little bit more detail, but for now I just want you to understand a few things. It's a very relaxing way to trade. It works with the dynamics of price flow itself. No indicators needed, no nothing needed, right? It's just a swing, and it can be used on stocks, day trading, daily, weekly. It can be used in futures or your tick charts, currencies, whatever. So after this, I will show you one that we were able to line up last week in the pound. So right here, what I want you to do, so you understand, we're just trying to capture a swing, just a swing that will give us 3 to 1. So right off the bat, let's just state that this is our objective, just so we know what we're after with all of this. It's always good to know what you're after, otherwise you don't know what you might get. That's it. So it's pretty relaxing. And this can be a tick chart while you're day trading the ES or the NASDAQ or anything else. So I'm going to draw a little model. I'm going to add a little bit more detail to this. So just think of it like this, and you can imagine any chart you're looking at often looks like this. It's relaxing because I'm not going to mess around in the muck. What I'm going to do is I'm going to wait for price to take off in an impulse, right? A process. It's going to look something like this. There's going to be, as price takes off, everybody's worried. How do I get on? You know, fear, fear, fear. Fear of missing out. Fear of this. Blah, blah, blah. There's all this angst. But this is relaxing because whenever I see action like this is showing me the intention that they want this market up. They're breaking it out of some area. They want this market up. And little swings grow up to be big swings. So you'll see what will often happen, and remember we're keeping this basic, is little swings will do something like this. So this is going to be our basic model we're going to work from. And then at some point, the pushers, you know, you guys know the type 1 type of trades. You know, when you see these little swings, you can map a market. See, these guys, they're pushing this market. At some point, and you guys know, the pushers, if price turns around, they're out quick, gone, buy, leave. And this is what causes, say, a type 2 trade. This is what causes the market to move faster on the way down. People are getting stopped out. Oh my God, the news is bad, blah, blah, blah. Usually it'll be some bad news. Everybody's happy, happy, happy. But listen, swings they start little, and they grow up. So this is what we're going to look for in our model. And although you can do left-sided entries, we're going to look for this. So we're going to look for something that gives us some kind of sellers, and this will show up in various ways. All right. And then those sellers get zoomed. And then we'll be looking at ways to enter the market. And there'll be various ways you can enter the market. So this is following the market. See, these are little swings. It's hard to capture a 3 to 1 from little swings. You need the thing to create a little bit of space. And they can go up for a while, but I don't worry. I'm swing trading. If you want to do a momentum pushing trading, you can do that as well. Nothing wrong with that. Nothing wrong with that at all. But this is about swing trading. And so here we have the sellers. So what I'm drawing here on the right is the basic model. See, all these guys are sellers down here. And you know, right? When price goes like this, everybody gets upset. People try to jump on. People try to short it. And if it turns and zooms, and we're going to look for a good zoom, right? We're going to look for like a wide range bar gap swap, something. We don't know. It'll show up in different ways, but we're going to look for these guys in some way to change behavior from the downside. And that is what is going to offer us our swing. All right, so that's going to be our basic model, how these little swings will grow up to be a big swing. And we can see that in markets all over the place. So let's take this as an example and begin to model it. Look at the impulse. You can see this thing. It's taking off. It's taking off. You can already see the map. Are there ways to project this? Yes, but we're not going to talk about it. We're just going to talk about the model right now. And you can see it'll come off in a scary. So let me just add right here. You want a scary. You want the scary pullback. So, oh my God. Why is it scary? Well, often it's because there's something over here where stops are and they're getting busted. That would be a type 1 and type 2. Now, this is a matter of following. You let them build some sellers here. Let them build it. You let them build it. Right? Follow. Let them build something in here. If price wants to turn, some sellers that are pushing it are going to have to wrestle with some buyers. And it's not all that hard to find them. And how are you going to find them? It's going to be some sort of an MPL, some sort of a multi-pivot line. Look, just if you go back to some of the blogs, you'll see where we're reading price. Sellers or buyers pick it up, they run into something. How do we know? Look, they turned them around. They're here. Sellers are here. You now know. Look, sellers sell. It's not a projection. Higher low, sellers get zoomed. Okay, so you get it. You get the picture. You get the model here. And that's what's going to create. You ever draw a median line and look and say, oh, that's a skinny looking median line. That's ugly. It's skinny, right? It's still doing its job, but it's skinny because it hasn't grown up yet. And what ends up happening, right, is these little swings end up expanding to create a big boy swing. That's all. And so now we're prepared, and generally when you draw your median line, you'll see, look at the handle of that median line. Minor, 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 major. But this isn't about lines. This is about swing trading. And so the lines are just describing it. Think about swing, right? It goes up. Just look for it to pull back and look for it to swap. That's simple. And then we'll talk about entries. Later on. But this is it. This is your model. Boom. Boom, boom, expand, build, sellers, zoom, sellers. Just like that. Simple swing trading. Boom, 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 expand, like that. Okay? Now, I'll show you how we handled the pound this week. Monday we come into class and look at all of these people. Look at all of these sellers. It goes on. Look at that. They broke out. And so it's very relaxing. I don't get very excited. I'm just watching now. All right. Little swings, little swings, little swings. Give me something deeper and then give me little, give me something deeper, and then give me something to swap. And so we watched it all week. And then as it comes down, we started to pay close attention. See, Makes little swings, little swings, little swings. And now as it comes down, we're paying close attention. So all you need is an impulse. And then all you need to do now is find where are the sellers. It will tell you. See, swing, sellers. It's even the same size swing here, see? Sellers, look, they're selling it. They're selling it. Boom. Now all I have to do is wait for those sellers to be tested and then zoomed. And you guys know how to read things like gaps, right? This would be the try. Zoom. See, look at the size of this bar compared to the rest of these bars. Zoom. So this is waiting, just waiting, letting everybody just run around with their heads cut off. And then as price turns, it drops into this scary and zooms. That's capturing a swing. Okay, and then you'll check. Say, all right, wherever your entry will happen to be. My entries are usually like this. You check and say, all right, can I capture 3 to 1 out of this swing? Yes, right? This is a swing. This guy never comes back and retests, but doesn't matter. You get the model. So this is very simple swing trading. All right, so we'll wrap this up and we'll finish on the series. And just remember, it's just impulse. Let it come down scary. Let it build somebody to swap. Let them swap it. Make sure there's 3 to 1 risk reward ratio. Make sure you know this is building you a stop, saying, all right, they made effort to go down and they went this way. So you want to get underneath wherever effort reversed.